Refinancing is starting to pick up, and I know you might think that sounds crazy, but with credit card interest rates at all-time highs and consumer debt rising day after day, more and more people are thinking about refinancing their home mortgages, and they're willing to leave the 3 and 4% interest rates that they got several years ago. So if this is you and you're thinking about refinancing, here is your step-by-step guide on how to refinance your mortgage. And if you need some help, my team and I would be happy to walk you through this process. You can hit the description below. There's links on how to set a call with my team, or you want to send me an email. I'd be happy to respond to you and answer any specific questions you might have about a purchase or even a refinance. Today, we're talking about refinancing, and I know, like I said, that might sound crazy, but yes, check out this article by Housing Wire that recently went up. They talked about more and more folks are refinancing their homes today. In fact, the numbers are picking up across the country as far as folks that are looking at refinancing their debt. So one of the things that you want to do when you get started in this process, and this is something that I do with every single one of my clients, we like to do a financial analysis to see exactly what we are looking at paying off and how much money is that going to take in order to make the deal work. There's a lot more work that goes into a refinance up front that I like to do with our clients. It's similar to a pre-approval because I want to look at which credit cards or which debt would make the most sense to pay off to free up your cash flow. For a lot of these refinances right now that we're looking at doing for folks, it's all cash out refinances. So folks are tapping into their home equity, they're consolidating debt, and they're also putting some money aside in savings or investing the money into real estate or maybe even renovating their homes. I'm not a big fan on renovating a house right now unless it's something you absolutely have to do, because if you're taking on more debt just to make your kitchen look nicer, I think you should wait to do that. But if it's something that's pressing and you need to do it for maybe health or safety reasons, then of course you got to get that done. But borrowing debt right now to do that, I think you're just putting yourself in a bad position. So the first thing you definitely want to do when you start to refinance process is make sure that you understand your options. This is something I always talk about: strategy and options. You want to look at your current debt, list out all the credit cards that you plan to pay off, what are the balances, what are the minimum payments, but I also want to look at how much are you actually paying towards that credit card. Now, a lot of people right now, because of inflation, they're only making minimum payments. I've seen clients that are literally paying $3,000, $4,000, sometimes even $5,000 a month in just minimum payments. That credit card is not even going down. That balance is never going to get paid off at the rate that they're making these payments. So we want to list out all of those things. And I would even suggest you doing this before you talk to a loan officer. Then what we want to do is we want to look at what do you owe on your property and what is the potential value. Again, you can run these numbers yourself. Look at your mortgage statement. It'll tell you what your principal balance is. And then you can just go to Zillow or Redfin and it'll tell you roughly what the home value is in your area. This is something that you want to take a conservative approach to. I know it's your house and I know you think it's probably worth a lot more than what they say online, but we want to be conservative here to see if the numbers work, because a refinance, all it's going to boil down to is numbers. What you owe, what it's worth, that gives us the equity. Then we can figure out how much of the equity do we really need to get the deal done, because you don't want to overborrow, because doing that, you're probably going to spend the money and you don't want to do that in today's market. So let's look at the debt, come up with a plan to see how much of those credit cards are we paying off, which ones will make the biggest dent in order to create more cash flow for yourself. Sometimes we have debt where maybe it has a lower balance, but there's a higher payment. A lot of times I see this with car loans. Let's say you owe $5,000 on a car, but your payment could be $750 a month. Paying that off is going to be a huge relief to you, because now you're freeing up from having to make that payment. But here's the thing: just because you pay off the car doesn't mean you start looking at cars online and you want to go lease a new one or buy a new one. The whole thing with refinancing right now is to free up and get some of your free cash flow back. So many of you have overspent, you've overborrowed, or maybe work isn't as busy or fruitful as it was a couple of years ago. I'm starting to hear a lot of that happening, where maybe a husband and wife aren't working as many hours, or maybe one of the spouses is not getting overtime. All those extra dollars that they were previously earning, they're no longer earning. And with credit card balances going up, their debt payments are going up. And I've even seen on mortgages that I have where they've been doing escrow analysis and my payments are going up because there's a deficit. I just got a letter in the mail on one of my rental properties that I was short about $1,000 in my escrow balance. So they increased my mortgage payment $120 a month. Luckily, it's a rental and I still cash flow on the property, so not a big deal. But for a lot of other folks, if it's your primary residence and now your mortgage payment went up $120, or let's say your insurance premiums go up, everything is becoming more and more expensive today. And these were all the additional costs that you never took into account when you bought your house. Even your energy costs, your food costs, your gas costs, all of these things, everything. Life is just more expensive today. And again, when you bought your property, depending on when you purchased, you probably qualified for the maximum amount because that was the market back then. In 2020 and 2021, rates were 2%, 3%. And in order to qualify for the house you wanted, you could buy another $50,000, $100,000 more worth of house. And maybe you spent an extra $20,000, $30,000 to get your foot in the door. So all of those things and those habits, those old habits that we have of overspending is coming full circle today. But if you have the ability to refinance, if you wipe the debt out, you need to make sure that you just start saving, paying down your bills, and rebuilding up that nest egg. So first and foremost, you want to make sure that you have that budget put into place, because when you talk to your lender, it's going to give him or her a great starting place. Because if not, your lender could literally just say, look, Joe, if you're looking to refinance your home, here's what the cost is going to be. Here's what it looks like. And you might say, look, that looks great. Let's move forward. But again, you didn't do any research. You didn't do any homework. Is that even the best loan for you? On a refinance, you want to make sure that the strategy makes sense, because I've had clients that have called me and they've refinanced their home multiple times with other lenders, and they were just literally doing a deal to do a deal. And I don't know why they did that, but that loan officer took advantage of them. And the thing you need to realize as a consumer today in the mortgage space, business is tough. Business is tough for everybody right now. So if you're talking to a loan officer and they're not going to take the time to explain these things to you and have your best interest in mind, you better believe they're going to try to convince you to do a refinance, because that's the commission check that they need. So you want to make sure that you are going through the process and understanding what you're getting into. Don't rush through it. If any loan officer is trying to rush you through a refinance, that should immediately be a red flag to you, and you need to slow the process down and start asking questions. So as we go through that budgeting process with you up front, that's going to set the entire table for us to move forward. Once you understand the benefit of the refinance, and if it truly makes sense to do the refi, then we move forward with a formal application where we will pull your credit, and then we're going to send you the list of all the documents that we need in order to do your refi. Again, the most common thing we're going to ask for is your mortgage statement. We're going to ask you for 1 month of pay stubs, 2 years of your W-2 forms, and 2 years of your tax returns, and 2 months of bank statements. Your lender will also ask you for your homeowner's insurance declaration page, so make sure you have that handy. You can always call your insurance company. They can email it or fax it to your loan officer. That's an easy way to obtain it. And also, if you have a homeowners association, they're going to ask for that most recent statement, or if it's quarterly, whenever the last one that you received, they'll ask for that as well, along with your property tax bill. So that's just a basic list of things that you should have handy for your loan officer. And then they're going to go ahead and order the appraisal. Appraiser will come to your house. And this is one thing that always holds up the transaction. The appraiser is contacting you as a homeowner to get into your home to do the appraisal on the house. So without the appraisal, we can't move forward. It can't go to underwriting. We can't get the deal done for you. So make sure that you're paying attention to this key process, because this could literally drag out for weeks. I've had clients that just took 2-3 weeks sometimes to call the appraiser back to get them into the house. And again, your loan officer can't do anything. So the thing you really want to also pay attention to is that your rate gets locked. The market right now is so volatile. Things are changing so quickly. There is no benefit to wait to lock your interest rate. One question you can ask your loan officer, and most mortgage companies offer this, but ask your loan officer if they have a float down option. And what that basically means is that you can lock in your interest rate today. Let's just say it's 7%. You lock in at 7%, and let's say the market gets better for whatever reason. Interest rates start to drop, and let's say rates today are now 6.5%. Your loan officer can look at doing a float down to where now you can take advantage of the lower interest rate on the loan. If you don't know this, your loan officer may just move forward and keep you at the 7% because what do they care? They just want to close the loan. This is where, again, it's so important that the person that you're working with is knowledgeable and knows how to do these other tactics, because that can save you a ton of money. So locking in your interest rate is almost a worst case scenario if you can take it. I would rather take that today versus gambling and interest rates spike up 0.5% or 0.25% because of who knows what's going on in the world today. So lock your rate in as soon as possible. I think it's only a negative to float and not lock your rate in, especially if your lender has a float down option. Now, once the appraisal comes back, your loan will go through underwriting. Again, once you go through underwriting, the underwriter will come back with a set of conditions that you will have to provide them. Typically, if your loan officer is really good with their loans, you should only have a handful of things that's needed in order to move forward. Some of those things could be an updated pay stub, could be an updated bank statement, could even be a letter of explanation of something very small on maybe your credit report or in your bank account. These are very easy things that, again, time is of the essence. Get that stuff back to your loan officer. If you can do it the same day or within 24 hours, that is always ideal because your lender can continue to push your loan forward. Remember, you're not the only client that's being worked on right now. So there's a process and there's a flow to everything that's being worked on. Now, the quicker you can get everything to your lender, the quicker they can push you through and get the deal done. Once the underwriter receives all of the documents that they've requested, they're going to re-review everything one more time, sign everything off, and then they can send your documents to title to do your final signing. Now, here's the thing with the final signing. You don't necessarily have to be there in person because there are mobile notaries that, let's say you're traveling for work or maybe you're on vacation. They can have a notary meet you somewhere in order to sign your portion of the documents that have to be physically signed. The rest of the stuff can be done digitally. A lot of lenders today are offering hybrid signings where you can sign the bulk of the documents through an online secured portal. And there's a few documents, depending on the state that you're in, they require wet signatures. So that's where the notary can meet you anywhere. I've had a lot of clients on vacation. They'll go to a Starbucks, they'll sign, might take them 10 minutes, and they can go back to being on vacation. So the signing process is very streamlined. It's very quick and easy. This entire process from start to finish on a refinance should take less than 30 days. The only reason why it would take longer than 30 days is typically the client takes a while to get the paperwork to the lender up front. The client takes a long time to get back to the appraiser, to get the appraiser in the home. And again, when we get a conditional approval, the client takes a while to get the approval documents back to the lender. So you can see here, there's a common theme with any sort of delay. It's going to be with you as the homeowner. So if you want to get through your refinance quickly, have those lists of documents ready that I mentioned. And if you need that list or you want it sent to you directly, send me an email. I'd be happy to send that to you. And if you're looking to refinance your loan, shoot me an email. I'd be happy to take a look and do an analysis for you. Thanks for watching. I'll see you on the next one.